it's important that you find a lender that's going to fit your needs for the type of transaction you're doing. So if you just go to one bank and they tell you that they can't do that kind of financing, there's probably another 9 banks that can. So it's important that you ask a few questions about what kind of lending that lender does. Some of them don't lend on investment properties at all. Some lenders will have a minimum loan amount of $50,000 and you're applying for a $30,000 loan. That's not going to help either. So you need to essentially find a lender that fits your needs. About 2 years ago, most investors churned their maximum amount of properties that they'll let you have to 4, and then other lenders will let you go to 10. That means your total amount of financed properties with different lenders can be a certain amount. Some of them are 4, some of them are 10, and some banks still just don't have a limit. So you want to make sure if you have multiple properties that you're going to banks that allow for more loans, allows you to have more loans on those properties. With loan to value, most banks on an investment property will lend between 70 to 80% on that investment property, which means if you're buying it, you're going to need to come in with 20 to 30% down payment. Whereas on a owner-occupied property, there are still no money down programs, 3.5% down with FHA, 5% down with a Fannie Mae or a Freddie Mac loan. There's all sorts of options. On investment properties, it's a little more strict. They're going to make you bring in skin in the game, more money from you. And one of the reasons that happened is because mortgage insurance companies that would typically be on your home if you put down less than 20%, mortgage insurance companies pulled out of lending or putting a risk on investment properties. So there's no longer mortgage insurance available on an investment property, so you have to put down a minimum of 20% now.